So are REITs actually considered alternative investments, or are they just another traditional vehicle? That's what we're going to talk about today. All right, so you might have heard about REITs or real estate investment trusts. Are they really an alternative investment? Or are they just kind of masquerading as this traditional investment, just sounding cooler, but they're really just kind of the same old boring thing? That's what I'll address in this video today. And really, are they safe? Are they really the best option for you? Or are there better options in the real estate space that you could be doing with potentially less risk and higher returns than you get from a REIT? That's what I'm going to address right now. All right, so let's talk about what a REIT is. R-E-I-T, Real Estate Investment Trust, right? Real estate investment trusts really are kind of the mutual fund's answer for real estate, right? They are not really a real estate asset. I got to be very clear about that. These are paper assets. You know how I talk about the different asset classes? There's 4 of them. We've got business, we got real estate, we got commodities, and we got paper assets. Now, paper assets are the most common form that you see. Pretty much anything you get from a financial advisor is going to be a paper asset. Stocks, bonds, options, mutual funds, savings, CDs, money markets, annuities, even life insurance are all paper assets. And it's not bad to have paper assets. But when you get a real estate investment trust or a REIT, what happens is that people will say, oh, I'm invested in real estate, I have REITs. The problem is this, is that when you look at a mutual funds are a package, right? And what's interesting about these packages when it comes to mutual funds, most people think of them as a package of stocks. They say, oh, you have all these stocks in here, and as the stock prices go up or down, you either make money or you lose money. But that's an overly simplistic way of looking at it. Mutual funds also have their own price that they have adjusted. It's not just based on the stocks in the portfolio, it's also based on the popularity of the mutual fund. For example, stocks could be potentially losing a little bit of money, but you could be making more money in that mutual fund if more people are buying into that fund, driving up the fund price. Because the fund has its own price. It's not like a total of all the shares of the stocks. It has its own price based on demand. But the opposite's also true. The stocks could be doing okay, but it could actually be losing money if someone sells a lot of those shares of mutual funds, especially if it's like a big institutional company like your Goldman Sachs or Wells Fargo's and things like that, right? You could actually lose money in a mutual fund. Real estate investment trusts are just a mutual fund that has real estate as an investment. It kind of takes me back to, there's a movie called Multiplicity, or with Michael Keaton, starring him in that. And in Multiplicity, Michael Keaton clones himself so that he can get, basically be in 2 places at the same time, right? He's a busy entrepreneur, he's too busy, he has to do family duties and everything else, so he clones himself. And then he's like, well, man, I'm so busy. He clones himself again. And then those clones even get together and they make a clone of themselves. And they kind of joke because the guy's pretty much mentally deficient, to put it nicely. The guy can't think well. They're like, well, you know how you make a copy? He's like, yeah. Well, it's like when you make a copy of a copy, you know how that image is not very good? Yeah, that's what we just did with this clone. And that's what mutual funds are like. It's like making a copy of a copy. It's a copy of the real thing. Real estate investment trusts are not real estate. Yes, they did buy real estate properties, but they're not really real estate. So just be aware of that. Now, there is one advantage of these. Compared to actual real estate, it is easier to buy and sell REITs. You can buy and sell them all the time, all day long, right? You can sell those things. It's not like a real estate property where it might be locked up and you can't make any money unless the property sells. But it also means that, when you get into a real estate investment trust, you're relying on the money manager to do what's best. And I'll tell you this much, it's not always the case. So here's where it can go wrong, right? With real estate investment trusts, I've seen a lot of money managers, even big companies, right? We've heard like a lot of these companies, like even like Open Door and even Zillow and different companies have been trying to get into the real estate game, especially when the market was hot. But what's crazy is I had a lot of friends that were doing real estate deals. They were turning around flipping properties. And a lot of these companies would come to them, and not just them, but even institutional money. So all these real estate investors are telling my other friends, all of us are talking about in these groups that we're getting a part of, these networking groups, they're saying, man, you want to sell this institutional money. They are paying top dollar for these properties. In fact, some of them are paying 20% more than the property is actually worth, which of course drives up the prices even more, making it harder and less affordable for people to buy their own homes, right? Because of these big companies, this institutional money. Why did that happen? In 2022, well, even before that, right? We had 2020, which was a big hot mess, right? Kind of a dumpster fire of a year. It was like I call it like the longest year that lasted for 5 years, it felt like, right? We had 2020, but during that time, they were pumping tons of money in. They're trying to keep people spending money. Well, as you pump a lot of money in, you drive up inflation, right? Because you got all this money that people got to do something with. Well, a lot of these people are taking this money and trying to give it to money managers. They're trying to give it to investments to say, here, do something with this. I got all this cash. What do I do with it? Well, these fund managers, bless their hearts. Again, they're trying to perform well, right? Because they know they get fired if they don't. But they're like, what do we do with all this cash? We got to buy something with it. They have all this pressure. They can't just hold money in cash. I mean, they could, but that's not the popular thing. People want to make more money. I mean, how many times did we hear in 2022 people are saying, don't hold your money in savings, don't hold it in cash because you'll lose to inflation. Well, these guys weren't any different. They're trying to figure out where to park all this money. That's why a lot of them were buying real estate. And because they had so much cash, they didn't care what the price was. They would drive up that price way higher than it was worth to buy these properties. Well, what does that mean for you? Because would you want to buy a property yourself over 20%? Well, that's what they did. So when you try to get into things like real estate investment trusts, I'm not saying all of them do this, but remember that these managers are just trying to buy properties, not even knowing whether these things are going to be good or not long term. So it's very possible you could be losing money in these REITs even though real estate is still doing well, right? So you got to be very careful about these REITs. Now, as I promised, what are other options? Could you do something better than having your money in a mutual fund? Like I said, REITs are good because you can buy and sell them. And yes, there is some kind of backing to real estate, but it's no more back than if you buy some gold investment, gold mutual fund that's supposedly based on the price, but it's really not. It's not an index price, right? It's just based on the investments in the portfolio that may or may not do well, plus the price of the mutual fund going up and down too, right? So how do you actually make it work? Well, you can also buy the real asset. I think one of the safest things you can be doing, other than the fact that you might have your money locked up a little bit, is by buying the real tangible asset. Don't buy the copy of the copy, right? Don't go buying something that's supposed to represent real estate, but it's not really backed by any real estate. You want something that actually has real value. Now, this does not mean just go in your town, go find some piece of crap property that you have to go renovate and spend years, fixing up, so then you can try to rent it and or sell it. I'm not saying that. That is one strategy to make money, but most likely if you're looking at REITs, it's because you want to be a passive hands-off investor, not hands-on. And so what I recommend is that you look at a few different real estate options that could be good. Number one, turnkey real estate. Turnkey real estate is where you actually go to a real estate company that's called a turnkey real estate company. They have a portfolio of properties. It might be in just one geographic area like where they are, or they might even be nationwide. There's a few companies that do that too. They might be in multiple markets. Now the great thing is they have this whole list, almost like your little menu, if you just kind of call it like that, right? Like going to a restaurant, you pull up the menu, you're like, what do I feel like today? Ooh, I feel like Oklahoma City. Oh, look at this. There's a little bit of Memphis. There's a little Graceland for you, right? Or whatever it might be, right? You kind of open up and say, well, which area would I like to be in? And then you start looking at those properties. And you might look at that property and say, this one looks good. And by the way, it even tells me how much cash flow I should be making on this property. Now, it's not going to guess appreciation. That's a different deal, right? But it's saying, hey, there's the cash flow you could be making off the rent after you pay your mortgage fees, if you pay taxes and insurance, as well as your property management fees, because you don't property manage it. The great thing about a turnkey company is that you're hands off. They manage the property for you. You just buy it. And so you could be buying that property, still be getting the checks from that money coming in every month. And if there's appreciation, there's better growth. And of course, even if there's not appreciation, heck, even if there's a recession, real estate's very good in most recessions. Other than the great global financial crisis that we had in 2007 through 9, real estate actually did appreciate or stay the same through most recessions in the last really several decades. So it could be one of the safer places. I'm not saying it's 100% guaranteed, but definitely a safer place to keep your money than even the stock market potentially, and even REITs for that matter. There's also other things you can be doing too. You can actually go in and pool your money with other investors to buy a bigger deal like an apartment building or self-storage units or things like that, where it's called a syndication. You pool your money together with these other investors and then go invest in that deal, and you have a share of ownership in that interest. Now, sometimes it could even be debt funds. You might even be lending your money to them. By the way, if you have debt on a property, you get paid first even before the equity investors get paid. See, most people are taught like, I gotta own stuff. But when it comes to the order of being paid back, just like if you have your own house, if you sell your house and have a mortgage on it, who gets paid first? You or the bank with the mortgage? The bank does, right? Well, what if you're the one that becomes the bank for those real estate investors? You lend your money. Guess what? When they sell off, you're the first one to get paid. That means if even things go wrong, you get paid back before the equity investors get paid. So again, there's so many ways you could be investing in real estate and have the real thing. Heck, guys, I have raw land, and we buy that raw land at cheap, sometimes for half or a third of the price that we turn around and sell it to a normal consumer for, or even somebody who wants to be a developer, whatever it might be. So I'm making great money, making big returns, buying cheap Versus if I buy a REIT, which we hope is considered to be alternative investment, but it really isn't, right? We buy that REIT that then just really has its own price and they might be overpaying for those properties. That's something I would never do in the private game like what we're just discussing here. If you want to go further down this rabbit hole, go check our other videos on Money Ripple's channel right here, because we've got lots of these questions about how to address these alternative investments. What are they? What's available to us? How could it even be better than what we can get from a financial advisor? Check that out right now.